Hi everyone, welcome back to Crack Grade B. And in this video, we have already covered all the major rules, regulations, circular, etc. Right? So everything has been completed, and now there are few miscellaneous topics that have been left for us to cover. So we'll be covering in these 2-3 videos that will be followed up. We'll be covering the miscellaneous topics that are important, right? And they will be covered in this video format only. So I hope you find them useful. I'll not be elaborating much onto it because in all these videos what you need to know is if there are some data, if there is any fact, you need to know all these, right? So we'll be covering them in a speed. In one video I'll be covering at least 2-3 different kinds of topics, as much as I can cover. Fine. So let's start with the angel funds under the IFSCA regulations 2022. So we have already seen, by now we have already seen the fund management regulations, right? Angel investors are one of those investors who have the funds with them. We call them as angel investors, right? They have money of their own money is there with them, and they give out that particular money for investment purposes, right? They can do direct investment also, and they can go through your venture capital undertakings as well. Right. So we'll be reading that what are the rules and regulations about them under our IFSCA. So first of all, you have been provided that the angel funds or angel schemes means it is a subcategory of the venture capital scheme that raises funds from the angel investors. Now, angel investors who are of high net worth, right? They have money of their own. They have the expertise also, and we call them as angel investors. Angel investor means including a venture capital scheme or restricted scheme which has been set up in IFSC and similar schemes, and that invests in angel funds in accordance with the provisions of this particular document. If you are following up this particular document, then we will be considering you as an angel investor. Next is, what is an early stage venture capital undertaking? See, so these angel investors, instead of investing in a already set up business, see, in case of a business which has already been set up, there will be many financiers, right? They can get the funding from different sources. But if you see, early stage venture capital undertaking means an early stage entity which has just been set up, correct? It will have difficulties in arranging the finance, and that is where your angel investors come into the picture. That is where your angel investors come into the picture. Now, what should be the features of these kinds of early stage venture capital undertaking? So it is incorporated not more than 10 years before the date of investment, right? So it should not be older than 10 years. It should not have an annual turnover in excess of $20 million. Since it's incorporation, annual turnover we are talking about that in any year you should not have exceeded more than $20 million. It is working towards innovation, development, or improvement of the product, processes, or services. That means, obviously, you want to invest in such kind of entity which is working for future, working for innovation, development, etc. It is not promoted or sponsored or related to industrial group with a group turnover of more than the $50 million. That means you should, these kind of entities, if they already have a backing of a great entity. See, this is an entity, and this entity is having a promoter, or you can say a group entity which is already having a turnover of more than 50 million US dollars, right? So they are having a support, and we do not want to support such kind of entities which already have a support. So I guess you now have understood the provisions for this particular thing. Now, applicability, they are going to be applied to the angel schemes which has been launched in the IFSCA, right? So they shall apply to the angel schemes launched by the fund management entities authorized or registered under the IFSCA. Now, Now, what are the permissible investments? So, angel schemes, they shall make investments in the early stage venture capital undertakings. We have already seen what is an early stage venture capital undertaking, right? Or other regulated angel schemes or angel funds as has been set up in IFSC, India, or foreign jurisdiction. Angel schemes shall not make any investment in the associates of FME, fund management entity, or in any early stage venture capital undertaking which is connected to angel investors. That means here they are prohibiting you. They are prohibiting you from investing in your relatives to the person to whom you are knowing. Fine. So associates of FME, I have told you when the fund management entity is holding 20% or more than share capital in another entity, it is called as an associate, right? So for an angel investor, we are talking that you an angel scheme should not also invest in any person or any what you can say institution which is connected to angel investors. Now what is this connection? So see over here, if the angel investor is an individual, right? So an entity founded by such an individual or his relative, angel scheme will not fund such an entity. An entity in which individual is a director, partner, trustee, or holds equivalent position, right? So that means if you are an angel investor, you are giving money, right? So this money will be used for such kind of entities which are non-related to you. You cannot give the money and then use it for your own kind of benefit, right? An entity in which such individual or his relative has control which entitles them to the 15% or more of the shares or voting rights or an equivalent right in the entity. Fine. So in such kind of entity, you will the angel schemes will not invest. If the angel investor is in body corporate, then an entity which is part of same industrial group under the same management as the angel investor, an entity in which such body corporate or its directors or partners have control or shares of voting right which entitles them to 15% of more of shares, right? So if the angel investor is in body corporate, then angel in schemes shall not invest in these. Fine. Now next is the investment approval and methodologies. Fund management entity of an angel scheme, they prior to making an investment, they have to obtain an express consent from every angel investor who desires to contribute, right? And plus the fund management entity shall make each investment as a close ended segregated portfolio by issuing separate classes of units to the consenting angel investors on a private placement basis. That means every investor, whatever amount he has invested, there will be a separate account for that. It is closed ended means maturity will be decided beforehand. Maturity will be decided beforehand. Got my point? Next is filing of placement memorandum and subsequent filings. So the FME shall launch angel schemes by filing a placement memorandum with the authority. The filing of placement memorandum for an angel scheme shall be under a green channel as specified in the fund management regulations. What is the green channel? That means the schemes shall be open for subscription as soon it is filed with the authority. Now next there is some fee. So for investments made in early stage venture capital undertaking, you also have to tell to the authority. So see, as a fund management entity, आपने investors से पैसा लिया है. You have taken the money from angel investors and now you are investing that money into the early stage venture capital undertakings, right? You are investing the money in the venture capital undertakings. So what is the fees for that? Fees is US dollar 500. For investments made in the other regulated angel schemes or angel funds, they shall set up an IFSC India foreign jurisdiction. The FME shall intimate to the authority, right? And within 10 working days, they have to tell, and the fees is US dollar 500. But because the formats are different for both kinds of intimation, if you are investing in an early stage venture capital undertaking, then the format of intimation is different. And if you are investing in such kind of entity which is not fulfilling the early stage venture capital undertaking, then the format is different. Okay. Number of angel investors. So number of angel investors in each portfolio under an angel scheme, they shall not exceed 200. In each segregated portfolio, they shall not exceed 200. Investment restrictions are what? An angel scheme shall not accept a commitment of amount less than $40,000. एक investor say you have to at least take $40,000 from each angel investors, right? Number of investees in one portfolio, there are different kinds of securities. Above we have already talked about that a angel investor wise account needs to be maintained as well. And in one portfolio, suppose you in one portfolio where you are keeping different kinds of securities, one portfolio can be given to how many angel investors? 200, right? So the money of max to max 200 investors will be invested in a portfolio. Now, what shall be the minimum amount of investments from the angel investors? It should be at least $40,000, right? And one more thing, it shall be invested across segregated portfolio or portfolios, whatever the case may be, for a period of 5 years. Now, given that the minimum commitment shall not be applicable in case the angel investor is an accredited investor, each investment made in early stage venture capital undertakings by an angel scheme shall not exceed the $15 lakhs. Fine. This is the maximum. $40,000 was the minimum. Lock-in period is at least 1 year from the date of investment. This is the minimum period. Minimum corpus. See, you have taken money from different kinds of angel investors. Now you have built up a fund. This fund will be invested in the schemes, right? This one will be invested in these schemes. So it shall have at least $1 million collectively under the all segregated portfolios created thereunder by the FME. Next is the contribution by FME. The FME managing an angel scheme shall ensure a contribution of at least 2.5% of the investment size or $20,000, whichever is less in each segregated portfolio. The FME, see this is the contribution by fund management entity. The earlier we have read was the contribution by the angel investor. What shall be the contribution of angel investor? Now we are talking about that what shall be the contribution of a fund management entity. अब अगर if you are making a fund, right? So in this particular fund, angel investor is also investing something. Fund management entity also has to invest something. So fund management entity managing an angel scheme, they shall ensure a contribution of at least 2.5% of the investment size. Whatever is the total investment size, at least 2.5% of that or $20,000, whichever is less in each segregated portfolio. Fund management entity, they shall be exempted from this contribution in following cases. If at least two-thirds of the angel investors are accredited investors, if at least two-thirds of the angel investors permit the waiver of such contribution. मतलब कि fund management entity will not have to make this contribution if two-thirds of your investors are accredited investors or two-thirds of your investors they permit waiver. If the investment made under the segregated portfolio is in the another regulated scheme, India or foreign jurisdiction, right? The said contribution, if brought in by the FME, they shall be included for the purpose of net worth requirements. We have already seen the net worth requirements of the authorized FME or your registered, your retail one, non-retail one. We have seen the net worth requirements. So if the fund management entity brings such contribution, it will be taken for your net worth calculations as well. And lastly, there are a few more things. Participation in subsequent investment round. See, so there was an entity, right? This was an early stage entity. And as an angel investor, you have given investment in them. You have invested in a scheme, and that scheme has invested in this entity. Now, once you have made the investment, now suppose this entity is working good, you want to invest again in that entity only. So now we are going to read the regulations for that. An angel fund that has invested in an early stage venture capital undertakings may invest in excess of US dollar 15 lakh. This was the maximum investment. Understanding my point, this was the maximum investment. Now, if you want to invest more than that in subsequent rounds, not in the first round, but in subsequent after that, so you can do so, but there are few conditions that you have to fulfill. The said undertakings, they have to satisfy the definitions of early stage venture capital undertakings, except for the requirement of annual turnover, right? Angel funds shall also give the opportunity to participate in the subsequent rounds to only to those angel investors who have participated in the previous investment rounds, right? So one those who have invested in the first go, they will also be allowed in the second go. FME shall ensure that the overall exposure of the angel fund, including investments in subsequent round, it should not exceed 50% of the total investments made by the angel funds under all segregated portfolio, or US dollar 30 million, whichever is lower. This is what they are saying to you, that as a fund management entity, it is very good that you are investing in a company, right? Let's say company A, you are investing in that company, good, but you have to ensure that after first, second, or any other rounds of investment, you have to ensure that your investment should not exceed 50% of total investment made by the angel fund under all the segregated portfolios, or US dollar 30 millions, whichever is lower. Okay. Now, for a fund management entity, they shall pay a fee of US dollar 3,000 at the time of filing of placement memorandum of angel schemes, and they shall pay a fees of 500 at the time of filing an intimation with the authority as well. Intimation, I did tell you, right? So whenever you are making a investment, you have to intimate. So for intimation, this is the fee, and this is the first time registration of the scheme or filing of the placement memorandum. So this is it. We are done with the angel schemes, angel funds. Now we'll be discussing few other topics as well. Okay. Now we'll be discussing a small piece of information about the family investment fund. Although this about this we have already talked about in the fund management regulations, right? But there was not quite a bit detail given in that. Fine. But this was the clarification which was given by the IFSCA, and we have thought that it would be nice enough if we include this clarification. Why? Because they have clarified this. There was a lot of confusion regarding this term, that family investment funds, etc., etc. What is the family? Who can do the investment? All of that. So they have specified it, right? There is not a regulation. This is not anything. This is just a clarification about the definition. This is just a clarification about the definition. So let's just read it. What is it? It is a very short and sweet clarification. It will be very clear to you. So family investment funds, which represents the interests of a single family, right? It represents the interest of a single family. Single family means it will also include entities like sole proprietorship, partnership firm, company, which has been founded by a single family, LLP, trust body corporate, in which individual or the group of individuals of a single family, they exercises the control. So whenever we are saying that in family investment fund it is founded by a single family, we mean to say either by the single family, as they can also take the following forms, right? They can also take such kind of following forms. So the another, for the purpose of this particular clause, substantial economic interest shall mean at least 90% of economic interest, right? We are meaning over here, see, we are saying that in a family investment fund, single family should be the owner. Okay, understood. Single family can take following organization types as well. It can be a sole proprietorship, partnership, company, LLP, etc. Now, suppose in a company there can be so many shareholders, right? But we want that if a company is there and if it is contributing to family investment fund, then in such company at least 90% of economic interest should belong to a single family. So when we are saying that a single family shall hold substantial economic interest, this is the meaning of substantial economic interest. 90% of economic interest means ki, if I say it in simple words, that means they are the owners for 90%. Owner, being owner for 90% means if there will be profit, 90% of that will be taken by you. If there will be loss, then 90% of that will be taken by you, right? So as demonstrated by the family investment fund, now the percentages of shareholding in case of a company with share capital, percentages they have told you. If you are talking about a company, then 90% of shareholding shall be with a single family. If you are talking about a partnership firm, then 90% of the share of profit shall be with a single company. And if you are talking about a trust, then 90% of the beneficial interest which shall be with the single family. The family investment fund, it shall not seek money from the individuals and entities outside of the single family. You are making the family investment fund for your own benefit, then you should not seek the money from the outsiders. But yes, they may share the economic interest with the employees, directors, or any other person providing the services as per the internal policy in order to reward the person. It happens, right? Suppose when this person A is doing a very good work for me, so I want to give him rewards. I want to give him rewards, so I can do that. In this regard, the family investment fund, they may accept the contributions from the aforesaid mentioned persons for the limited purpose, but only from such persons. And in no case, whenever you are giving any economic interest to them, there is a limit as well. If you are sharing some economic interest with them in order to reward them, then such kind of rewards, they shall not exceed the aggregate of 20% of family investment funds profit. इससे ज़्यादा आप share नहीं कर सकते. You cannot share more than this. Now, in cases where persons outside of single family also hold economic interest in the single family up to permissible limit, then such persons shall be informed of the risk of investment. And obviously, if they want exit out of such kind of family fund, then an exit can be offered. The prices for acquisition of such interest, see, if I already have, this is a family investment fund, right? Okay, now this family investment fund has been formulated by a company. In this company, 90%, 95% of share capital is with the one family, but 5% is with other persons also. Now, if this company is investing in family investment fund, then these 5%, if they want to leave, then they can leave, right? And if you want to acquire their interest, then the price should not be less than the price determined by the independent third party service provider like a valuer. So the highest price which may be paid by any person for acquiring any interest last 12 months, and the fair price to be determined by after taking in valuation. These are the things that has been specified. This was the little clarification about family investment fund, and I hope you found it useful. Okay, so all the miscellaneous topics related fund has been covered. Now we'll move on to the other topics. Okay, so the next regulation that we have in line is your IFSC Global In-House Center Regulations 2020. Okay, what is this Global In-House Center? This is nothing, just suppose You are a financial service group, right? This you are a financial service group and you want that you should be having a presence in IFSC as well. So this is kind of office that is representing you. Fine. So let's read what is a financial service group. This is a very short and sweet regulation. Nothing much is there to delve upon. But yes, there are some fees and some datas that you can have an understanding about. Apart from that, nothing much is given in these particular regulations. That is why we are covering this into the miscellaneous. So financial service group means that any entity which is regulated by a financial service regulator or any other competent body, like we have SEBI, right? In India we have SEBI. So, and it includes its holding subsidiary or associate companies, brand subsidiary or holding company. Now, what is a global in-house center? Global in-house center means a unit set up in the IFSC for providing support services directly or indirectly to the entities within its financial services group, right? Including but not limited to banks, non-banking financial companies, financial intermediaries, investment banks. These are etc etc. Now what is the work of global in-house center? So you can see global in-house center, it provides support services to the entities who are financial entities. What kind of support? So for carrying out a financial service in respect of a financial product. Okay. Now registration of a global in-house center, how it is going to register? So an applicant which is desirous of being registered as a global in-house center, they have to meet the following criteria. First of all, they have to exclusively cater to financial services group. Fine. And such entity should be from the FATF compliant jurisdiction. Support services provided to the group should be for purpose of carrying out a financial service in respect of any particular financial product. So basically, for whichever entity you are working for, you have to work for that particular entity only. Now, application for registration, you have to give to the authority your application. Now, in this particular document, the important things is this. So every application shall be accompanied with the fee. For the first year, fee should be paid along with the application. For subsequent years, fee should be credited before 15th April every year. Now, annual membership fee needs to be paid for these kind of global in-house centers. If you are having less than 2,500 employees, then this is your fee, annual fee. If you are having employees up to 5,000, then this is your fee. And if you are having employees more than the 5,000, then US dollar 10,000 is the fees that you need to pay. Now, what are the documentary requirements? So you have to provide your incorporation certificate of the parent, or if you are also an entity, then you have to provide your incorporation certificate. You have to provide your memorandum association, partnership deed, etc. Your organizational chart, that means who reports to whom. Last 3 years audited consolidated financial statement, if it is available for you, then yours, otherwise your parent entities. What you can do is, so you are going to provide the services to non-resident entities only. See, obviously, if there is an entity which is registered in IFSC, then it doesn't need a global in-house center over here. The global in-house centers are needed for entities which are not a resident in India. That means they are not having, for in a simple version, they are not having a presence in India. Okay. Relocation of employees from an existing entity in the domestic area shall be permissible with respect to the supervisory personnel only, which may be allowed with the prior approval of authority up to the maximum of 20% of strength in that particular category. Now, this is a provision which you can skip as well, not very important, not at all important actually. Next is currency, etc. has been provided. What shall be the currency? By now you already know that it should be freely convertible foreign currency only. Operational requirements, you have to furnish your information to the authority, right? They have to submit all the reports to the authority in the US dollars. Maintenance of books of accounts, records and documents, you have to maintain your books of accounts. Post registration as a global in-house center, they have to submit the following documents annually: annual financial statements, list of the financial services group entities served by the IFSCGIC during the year, किस किस को आपने services दी, and confirmation of the compliance with the regulation. Okay, so this was a small what you can say regulation about the global in-house center.